Hey everybody, my name is Brandon from thestockseries.com, and today I want to talk about GameStop stock, ticker symbol GME. What I want to do first is I want to go into Google and try and give you guys a couple guesses at why I think GameStop stock is up over 280% in just a single day. And then I want to go into the earnings report to talk about how surprisingly okay GameStop is doing as a business. And then I want to go into the trading charts to see if there's a level or two to buy GameStop if we want to buy GameStop. So now let's get started. So here we are in Google, and here's a one-day look at GameStop's chart here. And as you can see, from the beginning of the day to the end, we are up over 280%. So, when you see moves like this in a company, any company, the question is always why. So if you look at the news down here, a lot of people are talking about the next comeback for GameStop stock. So there is some fundamental news coming out of GameStop, which is that the CFO is being kicked out of the company. But to me, I don't think that's the reason why the stock is almost tripling here. We'll talk more about the CFO later on in the earnings report section of the video, but the main point I want to talk about here is the momentum and short squeeze. So of course, a lot of these articles are talking about a short squeeze part 2 for GameStop. We do see that the short interest of the company is still relatively high, around 50%. The reason for this is because I believe that some of the hedge funds that were caught up in the short squeeze decided to double down, shorting the stock again. And some other people probably shorted the stock as well when it was around a couple $100 per share. So could this short squeeze be why the stock is doubling? And honestly, maybe. But to me, something doesn't really smell right here. For one, short selling normally doesn't have a set expiry date. So of course, expiry of some large positions could have been today, forcing shorts to cover. But honestly, I'm a little skeptical of this. If we go back up here and look at the 5-day view, why didn't the shorts cover last week when everybody thought the sky was falling with the NASDAQ? So to me, it doesn't make sense why the shorts would wait until GameStop came up another 20% before covering. If you look at the other news articles down here, you'll also see that a lot of people are talking about Reddit and how they're pushing this. So by coincidence, I was actually on WallStreetBets this afternoon on my lunch break, and I tell you, I saw much more mentions of AMC than GME. Also, I've noticed that the volume of WallStreetBets posts on the daily thread has decreased substantially from its peak. So because of all those reasons, I'm not too convinced it's Reddit either. So honestly, I'm not too sure what's making GameStop jump, and I don't think a lot of these articles down here know either. I think the highest probability is a short squeeze, but still, to me, that's not really that convincing. But at the end of the day, it doesn't matter what I think. What matters is that the stock is mooning. So let's talk quickly about GameStop's fundamentals before going to the trading charts. So here we are in GameStop's earnings report, and the first thing that I notice is the net sales. So yes, we are down around 30% year over year in net sales, but we are still selling over $1 billion in the quarter. To me, I had to look at this a couple times to make sure I didn't make a mistake, because honestly, even as a lot of stores are still closed, GameStop still seems to be selling stuff, and that's a really good sign to me. I'm also seeing that selling general and administrative expenses, this line on the earnings report, it looks like it's also decreasing here year over year. And that, again, that's a good sign to me. And that's showing that they are trimming down the business and expelling some costs here. But of course, we are still losing money on the net loss here. We see that the net loss, we are losing around 18 million in the quarter compared to 83 million on the same time period last year. So even though we did reduce the net loss by a lot here year over year, we are still losing money. And this could be why some of the old people are saying that the bankruptcy is still a definite possibility for GameStop. And they are definitely right. Bankruptcy is definitely a possibility for GameStop. So the important thing here is that when you are considering to invest in a company that even has a remote chance of bankruptcy, you have to look at the net loss combined with the amount of cash on the balance sheet. we can see here that in about a 9-month period, we are losing around $300 million. So, annualizing that out, we are losing about $320 to $330 million in 2020 using our kind of hand-wavy math here. So now I'm going to show you a screenshot of the balance sheet. We see that management has only around $445 million to play with as easily accessible cash. So if you did some quick back of the envelope math here, it may seem like GameStop is losing a large amount of money compared to the amount of money that management has on hand. And that's true. However, this is not the end of the world here because management does have some options to raise cash, such as doing something like a secondary offering to raise capital. If we remember the news story I mentioned in the Google part of the video about the chief financial officer being kicked out, if I was to hazard a guess on why they kicked him out, it would be because he did not initiate a secondary offering when GameStop stock was at $500. Even as a mere common retail investor like me, dude, you gotta raise cash when your stock is up literally thousands of percentage points in a single year. There may have been some legal or regulatory reasons, or even moral reasons why the CFO chose not to raise capital, but the optics of the situation look really bad for the CFO. It looks like he didn't do his job. Now, I drag this point out because a secondary offering may be in the near future. By doing a secondary offering, GameStop would be in an incredibly better place financially. They would be able to get cash on the balance sheet now, and they would have the ability to reinvest that cash into their business, to reinvent their business for the next decade. Doing this, however, dilutes shareholders, so it may make the stock price drop. So now, with all that said, let's head on over to the trading charts to see if there's a level or two to buy GameStop if we want to buy GameStop. So here we are in GameStop's trading charts, and as you can see, we had a nice consolidation after our initial short squeeze here, but then look at today. Today, on relatively high volume, we really shot up like a rocket on the last half hour of trading, and especially in the after hours, we are at the 173 level here. So we are really making our way back up to the moon. So, this goes without saying, but we are seeing incredible volatility here. So if you want to play this game, you should be willing to stomach the volatility to the upside as well as the downside. As always, let's try to find some support and resistance levels. The first level that I see is actually where the aftermarket hours is now, around this 150 to 170 level made by this candle as well as these two candles over here. Of course, these aren't really strong because, there are only like 3 candles, but in a momentum stock, these levels happen really quickly. These equilibriums of buyers and sellers occur really fast. So of course, the real strong support level is when we have a string of days with relatively stable price action. And we can see here that this consolidation level is that strong support level around the $50 level. Who knows if it will get down here again, but I think that around this $50 to $75 level, I think that's where we're likely to settle in once this wave of momentum passes. Now, the real interesting question here is, will we see these $500 levels again? And, to me, the answer is a firm maybe. Honestly, I'd never thought I'd see 100 again, so if someone in the future told me that we'd see 1,000, then I'd just shrug my shoulders and say sure. The point that I want to make is that nobody knows how high GameStop will go or how any stocks will do. There are just way too many variables for any person or even algorithm to keep track of, and if someone tells you that they know for sure what a stock is going to do, then they're either crazy or they're just guessing random numbers like I did on my math tests. So if I wanted to step into GameStop, which, for me personally, I don't want to because I can't stomach the volatility or the risk, you could probably pick some up at the tops of these two candles here around the 150 level and hope it keeps going up. Just to cover the other major indicators here, we see that the MACD, which is a measure of momentum, is really about to cross positive here. Of course, that makes sense because this is a momentum-driven story, and in order for GameStop to jump 100% in one day, you'd probably bet that the short-term momentum is stronger than the long-term momentum that we're normally seeing. Again, this is purely a momentum-driven story, but you could see some selling come in from the bag holders in the initial short squeeze. a lot of these people are trapped up here and are just waiting for the opportunity to break even. So this could definitely put some cold water on the rally, but again, I would not be surprised at anything at this point. Because this is such a momentum-driven story, we could blow by these sellers here and keep going up and up and up. So that was my review on GameStop stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.